What's up, everybody? What is going on? Welcome in to the 10K to $2 million funding challenge. It is Wednesday, October 4th, 7 a.m. New York time. And we are live on YouTube, ready to go. It is halfway through the week, halfway through the first week of October. We are starting a brand new playlist today. Thank you, God. 70 something days of drawdown. Finally breaching all of the drawdown limits. And here we are back. And of course, we're starting off our brand new 10K phase 1 challenge in drawdown because that's the way we start every single challenge and funded account. We started in drawdown. Because that's the Venator way, and it has been the Venator way. So we're going to do a chat poll. Is Venator ever going to win another trade? Chat poll of the day. Will Venator ever win? Will I ever win again? When is it going to happen? No. Not really worried about it. It was a good setup. Pound Aussie. I was up. Called this out on Discord overnight last night. Actually did almost get to a 1-to-1. And then I wasn't aware of any news, but big old break up in around 5 in the morning. And did end up taking a stop loss. The only thing that I would have done differently on this trade is I should have, and when I was actually placing this trade, I said to myself, put it above Tuesday's high. Yeah, it still may get hit. High of the week on Tuesday happens about 75% of the time. Instead, I chose the bodies of the last stop run and thinking, well, we've already run the stops. We've run the buy side liquidity. We've had to change the structure. There's no reason for it to run buy stops again up there. That's the only thing I would have done differently here on this trade. But we're starting off. At least I know for the rest of the session today, there's no more trades to take for me. For my daily loss limit has already been reached of 2% loss limit. So that is the maximum amount of trading I can take in one day, according to my trading plan. So I know for me, the rest of the day is just going to be watching, doing analysis, looking to see how price moves, etc., but not actually taking any more trades today. So easy day for me now. Hopefully the rest of your days are going well, and if you are still looking to take trades, hopefully I can be of value to you in some way. But it's all good. Dollar has started to pull back. We identified yesterday or Monday, I can't remember what it was, whenever the stream didn't work. Was that yesterday when I was just talking to myself for like the first 8 minutes? I think it was. But this 4-hour breaker, we had anticipated price, if we got a pullback into and around that area, we would watch to see how price reacts off of this level here. Yeah, just looking to see. We have this 4-hour breaker. Price came down, took out sell side liquidity, and displaced through. So as we come into this 4-hour breaker here, I'll be watching to see, does the dollar want to find a new rally into, it has taken out, let me just show you, it has taken out buy side liquidity on a swing level. Right here, this is a swing level inside of a volume gap. It reached right up into that volume gap, took out the liquidity above those relative equal highs, and has displaced lower now, or moving lower. It's moved back into the fair value gap here, right into the top of this daily order block. Right into the top of this daily order block is where we're sitting as prices come back down. We're inside of fair value gap, and we're sitting at that order block. So And inside of that is where that 4-hour breaker block sits. Excuse me while I continue to yawn. Going on about 5 hours of sleep. The stupid smoke alarm thing again. I have no idea what's going on. I have a maintenance request issue for the complex that we live in, these townhomes that we live in. Somebody's got to come out today and fix that thing, because I am not staying up again. And it didn't do it all day long. The stupid smoke alarm was perfect all day. And then literally at like midnight, the thing starts beeping again. It's messing with me. So I'm tired. But I got my coffee. Coffee's all good. Coffee is all good. So let's see what's going on over here. Mr. Alfie, Alpha Bridge, John Cisco, Mr. Partha G, Beeswax, Shadow Trades, Red Ezekiel. What is going on? Good to see you guys over in the chat already. Thanks for being here. No mic issues. We could all, yeah, you all could just troll me and tell me my mic's off and I would believe you. I 100% would. Dad joke for today. Oh, good. Here we go. Already. Asked my wife if I was the only one she'd been with. She said yes. All the others were 9s and 10s. I love it. That's a great one. Good morning. Good evening, Shadow Trades. So you apologized to your wife again. I did. It was my fault. I don't know why the thing is going off. It doesn't make any sense to me. I ended up just unplugging it, taking out of the ceiling, removing all batteries. It shut it off. And thank God we did not have a fire. We survived the night without a working smoke detector in the house. I know it's shocking, but we did it. And I'm willing to roll the dice again tomorrow night, or tonight, I guess. Oh boy. All right. So what are we thinking here? We've still been bullish on DXY. The Monday low is right here. Where is that? So the weekly low is right down here. So for this candle to flip bearish, it's going to have to take out this low. And for that to happen, it's going to have to violate this daily order block right here. We have been in just an absolutely massive uptrend for going on 12 weeks. This would be week 12. Should we finish bullish again this week for the dollar? I still do see this now as this fair value gap getting filled in, but it doesn't necessarily have to. There's nothing else going on currently to make you switch your bias on the dollar. Nothing has happened. There's been no massive news events. There's been nothing in the economy or the numbers or the data to come out that tells you that this should change. Does that mean we won't get any kind of reversal? No. Can you get a few days? Yes, you can see we've had a few down days here, a couple down days here, a couple down days here. We've even had a couple big down days, but overall, the trend is still up. So we're just going to watch and wait until we get displacement away and through a key level on a higher time frame. There's no reason to switch your bias up just yet. Does that mean you can't take counter trend trades? I don't like taking counter trend trades. For those viewers that have been around for the last 100 live streams, you know I don't. I try to avoid taking counter trend trades. There's only a couple of places where I would do that. On a very clear TGIF reversal, And then once your higher time frame objective has been hit and tapped into, those next couple of days, you can take a counter trend trade, but it's got to be just chef's kiss premium A plus setups to do that. So for me, I'm just going to be watching again for the rest of the day, since we shot our bullet on the pound Aussie trade, and the rest of the day there's no more bullets to shoot. So for me, I'm just going to be watching to see how price reacts as it dips into this fair value gap, as it dips into this breaker. Obviously on the daily breaker, you have quite a large volume of ground in here that it could come down all the way into. So we'll just have to watch and wait. Euro dollar has moved higher, displaced higher. If we were looking for somewhere, it's moved back up into this daily order block here, moved back up into this daily fair value gap. The breaker here is this run on liquidity here began all the way at the bottom. We had this down move and then we shot up. So these candles all make up the 4-hour breaker here, which coincides with both of these 4-hour fair value gaps here and here. So price currently breaking structure, grabbing liquidity. It's tapped into this higher time frame liquidity and is starting to pull back. Don't let these pullbacks fake you out and think we're changing. Look how many times we've had pullbacks here on the 4 hours. You get these nice pumps up and everybody starts getting in buying, thinking we're at the bottom. And then it just keeps going down, consolidates, go down, consolidate. Oh, here we go. We've broken structure. And then it just wrecks it again. So you need to have a very clear switch before you should just change your bias. Look at the trend we're in. Just don't just jump in and be like, well, trend is over. Since July, this has been the price action. Downward to the right. Very clear downtrend. Do not just try to call the bottom. You do have some news today, the ISM Services PMI, but it's at 10 o'clock, so I would not be shy if I were looking for a trade setup. Excuse me. I wouldn't be too shy here in the early going if you got a setup to take it before that 10 o'clock news. Now, if you don't get your setup, if it's not there and you're getting within, 30 to 45 minutes of that news event, I'd probably just stand aside. But if you can find something that fits your A plus setup between now and let's say, so it's 7 a.m. So between in the next 2 hours, if you can find a setup to get into and out of, not a bad way to I would take those setups. But if it gets that close, and then tomorrow, Thursday and Friday, we have some rather large news events coming out. I'm sorry, today is Wednesday. God, my brain right now going on this sleep deprived state. Not super fun. So anyway, today, what happened? Yeah, ISM services at 10. And then Thursday, tomorrow, we have unemployment claims to come out. And then Friday, we have the non-farm payrolls and the unemployment rate. So tomorrow and Friday are you're going to have volatility. I probably will not be trading the rest of the week, quite honestly. Tomorrow I won't take any trades until after 8:30 tomorrow morning. That's the soonest I would be looking to take a trade. I'm not staying up and trading the London session again. I can't do that again. As long as the smoke alarm doesn't keep me up. And then the Friday, of course, you have non-farm and unemployment rate. Probably not going to trade Friday at all. So likely, unless I catch something tomorrow after the news hits, I'm probably done trading for the week. And then we'll just see as we head into next week what kind of setups we get. Euro dollar, though, we have reached that higher time frame draw on liquidity. We've tapped into it. That's what that red line is right there. It is this swing level down here. We've hit it and we've rejected off of it. Now that that's happened, we're going to need to wait on this higher time frame. Again, we're not just going to change our bias. All we're doing is pulling back up into a fair value gap, retesting a breaker of some kind over here. If you really want to pull out all that far, the main area here is the order block and the fair value gap. Until that gets violated, until you get displacement above an old swing level, like a actually displaced close above an old swing level, then there's no reason to switch your bias. That could happen in the next 2 days or into the next week. We could see that happen. But for right now, we're not going to just flop around. This is the monthly time frame here. This monthly fair value gap is the one that I would be most interested to see us reach into in October if we can. Obviously, large imbalance above. Does it want to come up in October and retest that? I don't know. Again, I'm gonna stay with what I see, and what I see is we're still in downtrend. We are due for a retracement. Absolutely, not gonna argue with you there. The market is extremely overextended. We've had 12 weeks of nothing but bearish price action, giving the bulls no opportunity to participate on a weekly time frame. So yeah, we're due. We've tapped in, we've taken out 1, 2, 3 key clear levels on the weekly time frame. Actually 4. 1, 2, 3, 4 key levels here of liquidity. That was after we had reached into the buy side liquidity. So once it reaches buy side, you immediately look for sell side. Once it reaches sell side, you start looking for some buy side. So yeah, we're due, but we need to see the switch. We need to see a switch, a very clear and definitive displaced switch before we just switch our bias as well. This is where a lot of people get chopped up in the market because they try to call bottoms. They try to jump in, and they've been trying to call a bottom. Every time we come to a liquidity level, they would call a bottom. This one, this one, this one, this one. So this is where people get chopped up trying to call and catch the bottom all the time. Just avoid that. Just wait. When you see a setup that is in line with your higher time frame bias, take that setup. And if that means you go a day or two because you're getting a short little reversal here and you didn't catch this counter trend trade and you missed, quote unquote, you missed an opportunity, you didn't miss anything. It's fine. Just wait until your trade setups line up with your higher time frame bias and then go from there. Oh. Shadow Trade says, sometimes I get questions in my mind like, are you sure you're doing the right thing by waiting so long for a trade? That is part of the trading pain, and that's part of the psychology and mindset that you have to work on. You're not missing out on anything by not taking a trade. probably the vast majority of your time trading, the correct answer is don't trade. Your setups should be so crystal clear. They should jump off the page at you when you see them. If you have to spend a massive amount of time analyzing charts to figure out whether you should be taking a trade or not, the answer is probably don't take that trade. The setup should just click. You should just look at the chart. It should take you about a minute to show you what your setup is. And if you have to spend 20 or 30 or 45 minutes telling yourself that there's a trade, it's probably not there. Now, you might get lucky and you might win some of those, but the best setups are simple and extremely clear when you see them. Not taking a trade is completely fine. If you feel this burn inside of you that you have to be taking a trade, that is a problem that you need to deal with. You're giving into the emotional greed, fear, pain, emotion. You're letting those determine your trading decisions. And that's going to lead to wrecked accounts. I promise you it is. Don't do that. Don't do it. Get very okay with not trading. Get very comfortable with not doing anything. Bespoke put out a tweet yesterday. It said their longest funded trader, or one of their longest funded traders, they've had their account since March something. They've held it. They've had multiple payouts. And one of the interesting things is that this trader, I think it was like 170 days or 180 days that they've held their funded account. It's one of the longest that a funded trader has held their account with Bespoke. So that's what, April, May, June, July, August, September, October. It's like 7 months now they've held that account, which is extremely long, by the way. Most people do not hold their funded accounts for more than a few months. So the fact that I held my funded account for 4.5 months, pretty damn good. Until it got breached. That's a very long time to hold a funded account. Now, the interesting thing is that this trader, of the 180 days, there were only, I want to say, 50 days that they actually took a trade. So less than 1 out of 3 days were they trading during that time. Again, just another piece of data to put into your trading lexicon, information, database, whatever you want to call it, for you to understand the people who hold on to these funded accounts, the traders that are consistently getting paid out, the traders that are making the most money in this business. They don't trade every day, and they're certainly not taking multiple positions every single day. The traders that are trading like that, there are some funded traders that can do that. But they are in the very, very small minority of traders who are getting funded, staying funded, and receiving multiple payouts. The traders who are taking the fewest amount of trades, that are taking the best A+ setups that they can find, those are the ones that are capitalizing, stacking accounts, building their assets under management, and continuing to receive payouts over and over and over again. Don't buy into the lie that you're different. Don't buy into the lie that you are going to be successful taking multiple trades every single day you sit down to chart. It's just going to keep you in the 90% club. You're never going to get out of it. You're never going to get out of it if you keep doing that. So stop it. You've got to become comfortable not trading. This is not a casino. This is not a gambling addiction to feed. This is a business, and you have to start making good business decisions. This is your business. This is how you want to make money. So stop making bad business decisions. If you want your business to be here a year from now, 2 years from now, 5 years from now, 10 years from now, if you want this business to be handed off to your kids or your grandkids, it starts with you making good business decisions right freaking now. So stop messing around with this. I've got to take 2, 4, 5, 7 trades every single day. If that's your trading plan, you might find some short-term intermediate success, but you're not going to find long-term profitability. The numbers just bear this out. You will end up a statistic and no longer in this business if you continue to trade that way. Patience, self-discipline, maturity, wisdom. These are the things that build long-term success as a trader. Sticking to your plan, keeping the promises that you've made to yourself, making sure that you are aggressively defending your position of making sure every rule in your system and your plan is checked before you get into a trade. It's just all about the mindset. The pain that you feel constantly when you open the charts. It is so powerful because our minds are not built to be traders. Our psyche, our survival instinct is really completely counterintuitive to what you need to be doing as a trader. And this is where most people can never get over and can never overcome that weakness. And it's not the reason why. One of the reasons why is because it's not a true weakness. We need all of those things that you fight as a trader. You actually need those things in real life for almost every other situation in life. We rely on our subconscious to make us aware of threat around us so that we don't die, or we avoid pain, or we avoid mistakes in life. And so it's super beneficial basically in every other area of life except when you come here to trade. And that's where people can't just turn off that switch when they go from I'm living and I need to protect myself, I need to be smart, I'm going to listen to my common sense, I'm going to listen to all of these gut feelings and intuitions that I'm having about situations around me. And I'm going to take in all that information and I'm going to try to make the best decision I can to protect myself and my family for future, right? We get all that. That's how we're built as humans. That's how God created us to be. We are designed to be protective of ourselves. But when you come into the markets, though, all of that natural wiring is what screws you up when you sit down to trade. And learning how to overcome that and deal with that, learning how to recognize what's going on mentally and emotionally when you're staring at the charts and you're wanting to take a trade, or you're wanting to manage a trade, or you're wanting to put on a larger lot, or you're wanting to increase your percentage risk, or you're wanting to just, give in to tilt and revenge trade, whatever it is, whatever those emotions are. That's typically what screws up so many traders. 2 years ago, before I became profitable, before I started getting funded, before I started getting payouts, blowing account after account after account after account after account after account, the pain and the misery and the sadness, the frustration reached a level where it got to a point for me where I just became so tired of being upset. I became so, just pissed off that I could not control myself, that I could not make good decisions, that it just reached a breaking point of really just having those. I've said this before. I started just talking to myself out loud in the moment while I'm on the charts, or right after a loss or right after a win. I would just start talking to myself. And this is the way that I would journal. Okay, I never had a pen and pad or a computer and write down and type out all my notes and then go back over them and read over them. My journaling was face to face, sometimes in a mirror. Most of the time just to the camera or just to the computer screen while it's happening. I would begin to dictate to myself everything that I was feeling. I would talk out the emotion inside of me, and I would try to identify it. And then I would begin to break it down to its instinctual level of where it's coming from. And the more I began to do that, the more I began to self-identify the emotions and the pain that I was feeling, the more I was able to remove the rational part of myself away from that and kind of look at it from above. And then the more I could do that, the easier it would become to go, that's not true. That's not true. That's not true. And then the more I could do that, the easier it would become to then go, ignore that, ignore that, ignore that, pay attention to that. And then it became easier to then make good trading decisions that were actually based on my trading plan and not based on what was happening in my head. So every time I would have a thought about, why am I not in the market right now? Well, why should you be in the market right now? What do you think? What is it that's making you feel like you should be in the market? Social media? Because you saw people take a trade? You saw people post a chart with a take profit and a stop loss short long tool on their chart, and they quote unquote won a trade or took that trade or hit the TP, and so you're not posting those and you didn't see that. Well, why didn't you see that, you loser? Why didn't you recognize that, you idiot? Why didn't you take that trade, you dummy? Well, you suck. Well, why, I need a chart to show. I need a picture. I need to prove that I can trade to all these other people that I follow as well. I need to keep up with so-and-so. If they can do it, I can do it. It can't be that hard. Trading's just a coin flip. You're probably going to win the next trade anyway. It doesn't even really matter what you do. In fact, if you just do the opposite of what you did last time, you'll probably win. You start talking to yourself and all of a sudden You've gone from you wake up, you make the commitment, I'm going to follow my rules today, and 30 minutes or an hour into the trading session, you've lost your account. And you've broken almost every rule that you had set up for that day. And geez, I can so clearly remember all of those feelings and thoughts and emotions that were happening. And now I can't imagine going back to that, because it took so long. It took so many weeks and months and years of my life given to being a loser at this, that I'm not going to go back to that trader, because I lost this 10K funded challenge, or this 10K funded account. The old me would have immediately just yesterday when we lost it, or the day before when we lost it, whenever it was, I would have immediately bought another challenge, and in that same day probably have blown another challenge. And it would have ruined my week. It would have ruined my day. It would have affected the relationship that I have with everyone around me. I would have been in a bad mood. I would have been grumpy, or I'd be upset, or just kind of mopey or sad. And now those things are gone. Well, they're not necessarily gone. I still feel the frustration of losing. I still feel the I don't want to lose an account ever. No one does. No one ever wants to blow an account. No one ever wants to lose a challenge. No one ever wants to get funded and then lose that funded account. It does not make me feel good about any of that. But what I do feel, I feel all those things, but I now choose to understand the reality of the situation, and that all of those frustrating feelings and everything that my subconscious is trying to get me to do to alleviate that pain is just going to add more pain to the situation. That's all it's doing. So I know I'm going off on this long kind of mindset rant right now. I saw a comment, I think it was Shadow Trades, about mindset, and not, why there's such a problem and an issue to fight this urge to get in there and take a trade or multiple trades. And I guess all of that to put a bow on this little piece, and then we can get on with the rest of the stream. You have to grow up. You have to be mature. You have to treat this like a true business. This is not a game. This is not some just, trivial side hustle pursuit that can that you just don't care about. You have to approach it like a professional. And professionals don't cry when they lose an account. Professionals don't revenge trade when they lose an account. Professionals don't overtrade because they feel like they're missing out. Professional traders stick to the plan, execute their plan, and they are in complete control of their decision making. They don't let that emotional tidal wave of pain and fear and greed dictate their next decision. So keep fighting that battle. It doesn't go away. It's going to be there forever. It does get easier to do the more you learn to say no to those voices in your head. They do quiet down. They don't ever go away, but they do quiet down, and it becomes easier and easier the more you the more you take control and don't listen to them. So, psychology mindset rant done for the day. There you go. I'm going to scroll back up. Some good advice in the chat that I'm seeing, Cisco. If in doubt, don't take the trade. Yep. Shadow says, just sitting down and watching movies while waiting for trade gives me the feeling that maybe there are people out there in a trade making profits and you're here. Yeah, we just talked about that. Account death day Friday. Yeah, the NFP often will be a big account blower. That's a competition account day, okay? Red folder news days, those are the days you go onto your competition account and you trade on that, not on your challenge. Powell said the Fed going to keep the rate steady, so basically the dollar power is still there fundamentally. We shall see on the charts. Yep. What's up, H? John, price action has to switch from mode 1 to mode 2. Mode 1 is directional movement and mode 2 is chop. Spends most of the time in chop. Mode 2 switches to 1 when support and resistance or structure breaks. Pretty accurate, pretty simple, good understanding there, John. I would not disagree with your analysis there. Channel, my setup is simple. I don't even need to go to TradingView. Once it's on my session, just MT5 is okay. It doesn't take time to spot that trade. That's a good strategy to have. You should not need to spend hours and hours on charts. In fact, probably spending 2 hours staring at candles every day on the live stream in the end may not be super helpful, because the longer you spend staring at candles, the more you're going to quote unquote start seeing setups. Your setup should jump off at you immediately. What's up, Saeem? Good evening. Welcome in, man. Bradley rant. There's all kinds of versions of Brad on the live stream. Sometimes I go off on my little soapbox and get up there and get a little preachy at you. It is a rant. I mean, it's both. It's whatever you want it to be. It's motivation, inspiration. It's a sermon, trading sermon. It's fine. Just focus on one good trade by Mike Bellafor. Yep. These are things I'm struggling with big time right now. Had the worst month last month, and I'm seriously struggling. Well, John, hang in there, man. You and me both. You and me both, my friend. We're both right there in the struggle. We have hit the losing streak. We have hit the cycle of trading wherein your trading strategy and plan is not working out. It could be execution. It could be analysis. It could be just data. It could just be probabilities and statistics. And don't let the emotions take control. What's up, Camo? Welcome in, man. Victor, good morning. Welcome in. So here on EU and GU, we've had basically been pretty bullish ever since overnight, since the London session. We did get a breaker set up here where we did grab a little liquidity. We displaced higher. Never got any good, decent pullbacks here into a fair value gap. It's now reached back up into some higher time frame fair value gaps and PD arrays. So we're just going to watch and wait and see where it wants to, or if it wants to at all, continue to move higher or lower. We are still having a bearish bias. So if we got displacement lower, I would probably potentially look for a sell setup there. With all of the news the rest of the week, I would imagine today's going to chop. I don't think you're going to get any more massive moves heading into non-farm payroll. I think the next couple of days are just going to be seek and destroy profiles today and tomorrow. And then Friday, you'll get however the week's going to finish out. You'll find out on Friday. And there's no reason to try to catch any more trades knowing what's coming. So don't be surprised if it just chops, that there's just not a lot of activity. It could just, it's the first week of the month. And so it could just be setting up a monthly directional bias through the rest of this week. Meaning after this week closes out, we'll know where the low of the month currently is. And then we can play off of that for higher time frame bias switches. So, don't get an itchy trigger finger. Don't just be here thinking I'm missing a trade. If you don't take a trade today, tomorrow, and Friday, guess what? Your account is safe. It's protected. There's no time limits on these things. There's no extra profit or bonus if you get there faster than someone else. It's not a competition. So wait for the high probability A+ setups to form. We can tell a lot of times just by looking at the economic calendar what days those are most likely to come on. And we know when not to trade. So there's only a few small windows every single week that we would be looking for setups. So just be okay with knowing, hey, this week I don't have the pressure of taking a trade right now. Or the rest of the week, I don't even have to look at the charts the rest of the week. I can just wait until Saturday or Sunday, come back, see what happened, and then we can put together a plan heading into the next week. So just hang in there. I'm preaching to myself as much as I am preaching to you. Okay? So these are all the things that everything that I'm saying to you, I'm saying to myself internally all the time. Cisco says, good trades, bad trades, good days, bad days, weeks, months, years, all will come with enough time. Data suggests overall in the long run, it will be profitable, so stick to it. That's where your focus has to be. Cisco is correct. It must be on the long-term focus. It must be on the next sample size of trades, not the next trade or the next week's trade or the next month's trades, but the next year's trades. Like we're in this for the long haul. We are in this to master a skill set that can stay with us for the rest of our lives. And there's no reason to think that we're going to get there in a month or 3 months, right? Or 6 months or a year even. If it takes a year and a half or 2 years or 3 years that you now have a skill set that stays with you for the next 40 years, it is worth it. Do the hard work now. Be aggressive on yourself. Aggressively monitor yourself now. It will shorten the learning curve. Brad, London breakers are just so good. I can't explain it, man. Yeah, Saeem, I agree with you, man. The London Judas swing and then displacement away is pretty epic. I gotta admit, I do agree with you. They're super clean. They do show up quite a bit. They work out quite often. Pound dollar, grabbed clear run of sell side liquidity, displaced higher. It is a counter move trend, or is a counter trend trade. Again, didn't give you a really clean which breaker do you use, which candle do you use. If you were using this one, didn't really come back down into a fair value gap anywhere. You got the displacement. That's the main thing. It sometimes you get the run of liquidity and the displacement. Sometimes you just don't get that pullback. It just rockets off. Again, don't be surprised if the rest of the day we just kind of chop around here heading into Thursday and Friday's news events. Currently, that 4-hour order block and fair value gap breaker here on the dollar showing a little bit of resistance. But again, If you were to use a premium discount of the trading range, the dealing range that you're in right now, this is the last swing low to swing high. A discount would be back inside this fair value gap here. Obviously, OTE would line up here. It's still inside that daily breaker, that daily order block. Until that daily order block gets traded through and displaced through, we would anticipate price finding some support in and around this level here somewhere. And our first point of interest is this 4-hour breaker right here. We'll just wait and see. I could see a scenario where we just accumulate right here, maybe today, and then tomorrow we expand that accumulation range, seek and destroy, and then Friday we grab liquidity, maybe potentially on both sides, and then we set off in a direction from there, heading into the next week. Don't get an itchy trigger finger. Don't just be looking for, wait for a very clear A+ setup to show itself. Okay. Pound yen has reached into initially our lower time frame, our higher time frame draw on liquidity. This inverted fair value gap found support, traded through, become an inverted fair value gap. Look at the body closures, 1, 2, 3, 4, displacement away, came back up one more time, tapped it, and then has fallen away, displaced below this level here, displaced below that level here with a closure below, with coming back up inside to rebalance some price. Bank of Japan is intervening. That was a big drop, and then it's still going to cap. They're not done. There's still going to be a lot of room to the downside here on pound yen. So we're just going to watch and wait for, it's got a very clear, it's rejecting very clearly off of this order block, off of this fair value gap here on the 4-hour. I would still be looking, I think, to sell GJ when I can. This pop up does not, this is to me, it's a bull trap currently. I would continue to want to see weakness here as we head back down, rebalance some of this gap. I think you're going to see some lower price action here on GJ. Pound Aussie, again, the only mistake that I'm going to call it a mistake because I actually, in my analysis of where to put my stop loss, I was looking actually at, where was it? I was actually telling myself when I was doing this analysis to put the stop above Tuesday's high. If you'll remember, on Monday, we identified this fair value gap, this weekly fair value gap here on GA. And we had said we would be waiting for price to fill in this fair value gap and then look for sells. And that's exactly what happened. This is why I'm fine with the way I took the trade. I had said on Monday, when price was over here on Monday, go back and watch the stream, I had said, I'm gonna wait until we get displacement. After somewhere inside this fair value gap, I'm going to wait to see if we get displacement and clear breaks of structure before I look to short GA. We filled in the fair value gap, weekly fair value gap completely. We started moving back down. We get this clear run of buy side liquidity, and then we get displacement through and down below. And then it was just trying to identify, where did this run of liquidity begin? Where's that breaker? Where's the displacement? Where's the fair value gap? Where does it make the most sense? And the whole time I was doing this, I was telling myself, you should put the stop above the Tuesday daily high. And we'd still be in that trade. That doesn't mean it's not going to get run anyway, but that's the one part of taking a loss. You should always try to learn from your losses. There's something always to be learned. Was there bad analysis? Was there poor execution? Was the entry where you wanted? There's always stuff that you can walk through every single time you take a loss. And on this one, my stop loss placement, I questioned it. Even as I was placing it, I questioned it. And I wished now that I had just done what I thought made the most sense. Again, this could still run Tuesday's high, and we could put in another high here again. But at least I would still be in this trade, though in drawdown, the stop would not be still have been hit there. So we'll have to wait and see. It'll probably play out the way it is, and it may make a new high up there. But that's the only thing on this analysis that I would have done differently. Same for dollar yen. With the dollar being still bullish and the Bank of Japan intervening, you've had some big drops. We've tapped into our higher time frame draw of liquidity here, and now we're just going to wait and see on UJ. UJ is very choppy to me right now. Like I think I would want to see this huge, massive candle here. That was, again, some of the Bank of Japan stuff. It did grab a bunch of sell side liquidity. It's not really showing a massive desire to want to run higher or lower. It was a big, massive wick. We're just now back into a consolidation range. Like John was talking about, the mode 2, where it spends 70 to 80% of the time accumulating, moving sideways before it gets into mode 1 in his terms. All right, chat, what are we going to talk about for the rest of our time here? Because for me, I am not going to be taking any more trades, but I'm happy to stay on for a little while longer if there's things that you guys want to discuss. Saeem says, I tried to get it, but couldn't get in on GU. Yeah, didn't get it. It didn't give the pullback. My best learning is price needs go up to go down, and price needs to go down to go up. And it happens every single day on the London session. It does happen quite frequently. I totally agree with you. And that is a good way to think about how price moves, that if it wants to go up, it often will go down first into an area of liquidity before it wants to go in its true direction. And opposite, if it wants to go lower, it often will go higher first into pools of liquidity that then move in the opposite direction. That is often a very clear sign. And because price wants to provide efficient delivery of price, that's why fair value gaps are good entry targets, because price will want to come back and rebalance those areas and provide efficient price delivery. And once it hits those, it will often, very often, move away from there. We'll be giving, what's today? Wednesday. So Friday, we'll be doing another 10K account giveaway on the live stream. If you haven't yet, if you're looking to purchase a challenge, I definitely would recommend using the discount code Venator. You get 15% off and an 85% lifetime profit split on any challenge. And it does go to support the stream here. I'm going to keep this free of charge, these live streams. Currently the Discord channel as well. So if you are in the Discord channel, if that ever changes, it won't ever change for you. But you can help two things. You can click that like button on the live stream. That helps support the channel. And then you can use that discount code Venator with Bespoke Funding, and that also will help support the channel. I was wondering if all of the political stuff going on here in the States would affect the markets, and it doesn't look like it has too much. The Republican Party removed the Speaker of the House. A historic event in the political history of the USA, removing the Speaker of the House in the middle of his term. So that's a big deal. But the very far right conservative side of the Republican Party kicked him out. They had enough votes to oust him. So I didn't know if that would have any kind of impact today, but it doesn't. It's not had any massive impact, if any at all. So it'll be interesting to see how it plays out over the next couple of days, the next few days or weeks, that there is no Speaker of the House now currently, which is important because the Speaker of the House, I believe, is third in line to the presidency, if I'm not mistaken. I believe it's obviously the president. I think it's the vice president. And I think the Speaker of the House is next. Maybe I'm wrong. Somebody can correct me. I should know this. But I believe the Speaker of the House comes after the vice president, should that need ever arise in succession before an election happens. So kind of a big deal that seat sits empty. It's actually held by a temporary person right now, just someone to be able to, I guess, for the Congress to be able to do its work. They do have an interim, a pro temp person running it, but they're going to have to hold a new election in the Congress to elect a new Speaker of the House. So that was kind of a big deal. But it doesn't seem to have had any massive influence really over and on the markets currently. The economic data numbers are really what's kind of more important in bolstering the currency markets here, more than the political issues happening in the U.S. currently. That's what I thought. Thank you, John, for the confirmation. It's going to be an interesting year for trading as we head into an election year next year, 2024. I would anticipate some volatility. I would anticipate manipulation to the highest degree, whether that's manipulation of data or manipulation of currency itself. Remember, politics and elections, they're not for the people. Anytime you have a chance to vote, you should. But you should also understand that whatever is happening, it's not for you. It's for the people running. It's for the parties that are fighting for control and power. That's what elections are all about. It's not about you. It's not about making your life better. It's about who can stay in control. What do I have to say? What do I have to promise? Who do I have to fight? Who do I have to disparage? It's about control, and don't ever think that it's anything differently than that. And it doesn't matter what your party affiliation is, where it doesn't matter what country you live in. It is ultimately always about who can stay in control, who can get the most power handed to them. That's what elections are about, sadly. there is a very, 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 very small minority of politicians that are actually working and fighting for the actual people in any government, in any country. And that's just a sad. And that's not. I'm not trying to be a Debbie Downer. I'm just trying to be a little bit of a realist when it comes to understanding what's going to happen next year when we get into the political election year, especially here in the States. Looks like we're going to have our good friend Donald back in the spotlight even more than he has been. It's going to be a circus. It's going to be drama. It's just going to be chaos. It's going to be a controlled chaos for the next, really, as we head into, like, it's almost 12 months away. So November is election month next year. Our elections are held, the U.S. elections are held in November. So basically between now and then, it's going to be nonstop crazy town on the political landscape. I saw a great t-shirt. You know how people wear political t-shirts? And so in the United States, when you run for office, you're the president, the ticket that you're voting for is the president and vice president. So you will often see like Biden Harris 2024, Bush Cheney, 2004. Whatever, Reagan Bush 89, whatever it was. So you always see like the names and then the year. That's in the States. You see those bumper stickers and posters and T-shirts and hats and whatever it is. It's it's just those names and then the year. And I saw one. I can't remember if I think it was Instagram or Twitter or something, but basically the shirt was anyone under 80 years old, 2024. And I was like, I resonate with that. Let's do that. Why are we voting in geriatrics? I love my mom and dad. I love my father-in-law and my mother-in-law. I think they're great people. I think they're super wise. They're very well educated, highly educated, very smart people. They have been very successful in their lives. I would never want any of them to run the country. We're trying to decide right now on my parents' side, with my family, and on my wife's, her siblings. We're all having conversations about our aging parents, trying to decide when we should start stepping in and having the conversations about being way more active in their caretaking. And they're not as old as Trump or Biden. And I'm like, why are we still... This is the best. This is the best that America has to offer to lead this country, is geriatrics. And the answer is no, it's not. But the system is built so that they are. And that's sad. Man, when I don't have a trade to take, I hit all kinds of little rants. I need a trade to take so we can stop talking. Or I need John. John, what should we talk about? Give us some cultural topics to discuss that aren't so heavy. Cisco, it's actually ridiculous that politicians can make up lies when they run. We need some form of requirement to actually work on what they claim they would. You would think so. The way that you see elections run across the world, there's so much skepticism into the validity of any true outcome anymore that it's just how do the people hold the governments accountable anymore? How can the people in any country hold the government accountable any longer? And there's not a good answer. There's not an easy answer, and no one probably likes the answers that it would take to stomach the answers it would take to actually correct the situation. People literally can't get out of house when it happens. That's so sad. And it again, it's not just the U.S. I mean, you can point. What is one sovereign country where you can point to in the world that is actively working and is set up for the people and by the people and truly operates in that fashion? And not in a financially motivated fashion, a power fashion, a control fashion, whatever it is. I can't find one. I can't find one. I can't point to one. They do. It is truly an illusion of choice. It is truly an illusion of choice, Abel. Very well said. We'll be here making money no matter what. Well, we will be here trading no matter what. I can't promise we'll be here making money no matter what. We'll be doing our best. For sure. What's up, BZin89? What happened to current funding? So we have been in drawdown for 3.5 months. We've been fighting it and fighting it and fighting it. We made some progress. We chipped away at it, and ultimately we ended up losing the funded account after 3.5 months, which is actually a very long time to hold a funded account. Believe it or not, statistically speaking. We did our best. We executed to the best of our ability, but in the end, we breached the drawdown limits and lost the accounts. And so now we're back to square one, the brand new 10K challenge. And we are back to just back to the beginning. And it's kind of nice and refreshing. There is a clearness to my head starting over with a fresh new account. After 3 months of fighting drawdown for so long, it's refreshing to be back to square one and starting fresh and attacking a new challenge. So that's what's been going on. But always, you can jump into the Discord, BZin89. We have a free Discord channel, Venator Discord. And we keep, it's an easy way to keep up with everything that's going on. I've only been posting all of the trade calls in Discord currently. And some of that's due mostly to wanting to keep the trade calling to a smaller audience based on the copy trading from Bespoke itself. It's pouring down rain again. We've had rain for 3 straight days here. Which is fantastic. I'm super happy for it because we have been in a massive drought all summer. So we're getting that bounce now off of grabbing some sell side liquidity here. If you are a counter trend trader, I would start potentially looking and eyeballing this area here on pound dollar. We'll need the next 15-minute candle to close and see what happens, but you could potentially have a counter trend trade set up inside of here. But you're going to need to see a pullback. Let that 15-minute candle finish. It just opened. You're going to need to let the next 15-minute candle print, leave behind a fair value gap, and then you can begin to identify a potential move. It's just now happening. This is just a This is just an anticipation of what may be to come. So you just start identifying, well, here's the last up close candle. Here's the quick stab down into liquidity. You can see, depending on what time frame you're on, we've run sell side. We're displacing higher. On the higher time frame, we took out a swing low, a short-term swing low. We've traded back up above that move that created that run on liquidity. And so now we're just going to wait and see, but you're potentially going to be looking for potential moves like this. But you're going to need to let those candles play out. Don't just jump into a trade in position because you see a big candle printing. That's not your clue to take a trade. That's your clue that something might be setting up. Something might be setting up. That's your clue. Oh. I'll stay on for just a few more minutes today, since I know I'm not going to be trading for the rest of the day. I don't feel the need to stay on for a long time today, unless there's something specific you guys have a question about, want to chat about. I'll probably be getting off here shortly. You know what we could do? You know what we could do is I could show you a little bit of FX replay and a little bit of strategy testing. I know a lot of people like that and have an interest in it. So why not? Why not? Let's make a new one. Let's use Euro. It's fine. And let's start all the way back in January. I'm going to start on that Sunday only because of the way that the FX replay, if I want to start on Monday, I need to start on Sunday so I can jump to the Monday. I'll explain that in a minute. We're not going to get this far, but we could just say October. I'm not going to name any of this. We'll just call it chat review for now. And then we're going to go into it. I'm going to minimize this. I'm going to take off this volume. I'm going to set the UTC to New York so that it's in New York time. I'm going to jump up. I'm going to stay on the 10-minute time frame here. This is the time frame I've been building out my strategy on, is the 10-minute time frame. So I'm going to go to the New York session. All right, so this is Monday, January 9th. So what I'm going to be looking for is very simply, I'm going to be using the inverted fair value gap. I'm going to use the New York session. I'm going to wait for a fair value gap to be created in the New York session. It doesn't matter whether it's long or short. Does not matter. I'm going to wait for a fair value gap to be created. And then once that fair value gap is violated, I will look to take an entry on a touch of that fair value gap. And I will be looking for a 1 to 1.5 risk reward ratio. Okay. So that is what I'm going to be testing here. So we're now here at the 7 o'clock hour. It just started. So we're going to wait and see. Oh, and if there's a red folder event, we will not take a trade until after that red folder event. If after the red folder event, we get a violation of a fair value gap, we can take a trade. We will not take a trade past 11 a.m. And if we are in a trade, we will close it out no matter where it's at by the 1600 hour. We'll close the trade out before the 1600 hour hits. Okay, we will risk 2% per trade. That's just what I'm going to risk right now. It's fine. In the long run, we may not be doing that, but just to keep things the way I'd normally do them, I'm going to keep it at 2%. So here we go. We're just going to print candles until we see a fair value gap created on the 10-minute time frame during the New York session. Once we see a fair value gap created on the New York session, we will then wait for that fair value gap to be violated. Once it's violated, we will take a touch of that inverted fair value gap. No fair value gaps, we're just waiting. So currently no fair value gap. We'll see on the next candle. There's no fair value gap there. No fair value gap. No fair value gap. So we're just waiting. There's a fair value gap right there. Okay. So right here from this high to that low is our fair value gap. If this gets traded through and violated, we will use that as a inverted fair value gap. Okay. Now we have another fair value gap. So we'll just take this one. If that one gets violated, we'll use that as a inverted fair value gap. So same thing. We're just going to keep identifying our fair value gaps. If they become violated, we will use them. No fair value gap there. No fair value gap there. Fair value gap here. If this fair value gap gets violated, we will continue and do an inverted fair value gap test. So we could go long. If this one gets violated, we'll be looking to go long. If this one gets violated, we'll be looking to go short. So I hope everyone is understanding how I'm using this strategy. This fair value gap has been respected. This fair value gap has now been violated. So we will look to go long. What time is it? It's 9:40. We're still able to take a trade. This fair value gap has been violated. If price comes back and touches that fair value gap, we will be long, and we're going for a 1 to 1.5. Our stop loss is below the candle, the candle that created this fair value gap. So 1, 2, 3, there's our fair value gap candles. The stop is down below where that fair value gap was made, if that makes sense. Okay. So we're going to place a buy limit right here. So if price comes and touches that fair value gap, we're looking for a 1.5. If price hits that profit target first, obviously there's no trade. Price hit and violated our profit target, so we will be out. We'll cancel that order. We're done. No trade. It is now 10 o'clock. If price, so it's likely not going to get a trade set up on this day, but there's another fair value gap right here. If this gets violated and we have an entry, we could go short. No fair value gap, no fair value gap, no fair value gap, and now it's 10:30. No fair value gap. It is now, what is that, 10:50. So there's not going to be a trade today. So this Monday, there's no trade. So we can just immediately go no trade today. We had a few fair value gaps. We did have one trade set up. It did not get triggered in. It would have hit the 1.5 had it triggered in, but it did not. It didn't come back down into that fair value gap and test that. All right, so now very easily, we just hit go to New York session. We jump to the next day. Same thing. We have a red folder news event, so we're not going to take a trade until after Fed Chair Powell's speech on this day. This is Tuesday, January the 10th. So we know we can just pump candles forward until we get past this news event. So we will just fast forward. And now here we're almost to the news. There's the news, obviously. We're going to wait. And now we're going to wait and see. It is now 9:10. So 9 o'clock, the news came out, 9:10. We have a fair value gap here. And we'll just keep waiting to see. No fair value gap, still no fair value gap, still no fair value gap, no fair value gaps, nothing. Fair value gap here and here. Okay, so now we have two fair value gaps that we're working with. You've got this large news fair value gap that if it gets violated, we could use as an inverted fair value gap. And then you have this smaller fair value gap that if it gets bullish price action, we can use to go long. Okay, so we're just going to wait and see which one, if either, gets violated at all. This fair value gap has been traded through from the news. It has been completely violated. So we will now look to go short on a retest of this fair value gap. And we will use the high of this candle here. This is the candle that created the fair value gap. 1, 2, 3. So we'll use the high of the candle that created the fair value gap that was just violated, and you'll go for a 1.5. Rather large comparatively. This is a 11 pip stop. This is a 24 pip stop on EU, kind of large. But we'll set up our order. It's going to be a sell limit. We're risking 2%. So if price retests that fair value gap, then we will anticipate that move. We'll see what happens. All right, we're triggered into that trade, and now we can just, there's no break even. We're going for 1.5 or stop loss. Those are the only options. We will close this trade out if it's still active right at the end of this box here. So as we come to the end of the trading session, we will, so this is the 1550. So the next 10-minute candle would be the end of the trading session. So we would close that position on the next candle opening. So it closed out right there, and you can see account balance. I don't know, you guys can't see that, but the account balance is down less than 1% on that trade. So we're currently took a loss down less than 1%. Go to the next New York session. We will be looking for, we will continue on looking for a fair value gap, inverted fair value gap test. All right, moving on. We'll do this for another 15 minutes or so. See what kind of data we can get here quickly. Fair value gap has been created right here. If that gets traded through, we'll look for a long. Another fair value gap created right here. If that gets traded through, we'll be looking for a long. Okay. There we go. Right there. The candle that created this fair value gap is down here. We will place your order. It's a buy limit. Again, did not. Oh, shoot. Dadgummit. I screwed that up. Once it violates another fair value gap, God, that's what I was supposed to do. Sorry. Once it violates the next fair value gap, you can use that fair value. So if there's two fair value gaps back to back like this, once it goes through the first one, you set your limit order there. If it doesn't trigger and it violates the next one, you can use the next one as your entry, which would have been, dadgummit. I gotta follow my rules better. So once it violates this fair value gap on this one did not violate, this one did, you would set an entry right there. And you would do the, that was right here. And your TP would have been 1.5 up here. Dadgummit. We're going to cancel the first one because it already hit that, but that one would have been a full TP, unfortunately. We can't count it. We missed it. It is whatever it is. But that's the rule. Once the one is violated, you can set an entry. Once the next one's violated, you take that one. All right, whatever. We didn't get that trade. So the days, what time is it? It's 9:40. We'll see if anything else. Small fair value gap there. God, I don't want to take this trade only because I missed the entry on this one. I'm not going to take another trade. So I know that would have been a winner. It doesn't count towards our statistics. I'm going to let it go. I'm not going to take that trade. I'm just going to go to the next New York session. All right. Next New York session. Same thing. Here we go. I'm going to try to follow the rules this time. Oh, wait. We got news down here at 8:30. This is Thursday. You've got CPI and a Biden speech. So we're not going to do anything until after 8:30. And almost there. One more candle. And there's your news candle. No fair value gaps. Tiny fair value gap right here. I would probably be very hesitant to take this after such a massive wick and jump on these candles here. We get a violation. So technically, we'll follow the rules. So you have a touch of that. The candle that created it would be up here and 1.5. Going for a sell limit, a retest of that fair value gap, and we're targeting. There's your target. You triggered in. And your TP set. So now you are at, we are 2% in profit on this account. And this is Thursday 12th, January 12th. So this is the first full week. All right, done for that day. Go to the next New York session. Waiting for a fair value gap in the New York session. I'm not worried about these fair value gaps up here. I'm not worried about anything that's happened in London. I'm only waiting for a fair value gap to be created in the New York session. And then if it gets violated, I will use it as an entry. There's no fair value gaps. Oh, is there news? There is news at 10 o'clock on Friday. Michigan Consumer Sentiment Index. I will trade through that. That is a red folder news event that I will, I'm not going to avoid that one. So we're free to trade. Fair value gap. If this gets violated, we will look for an entry. It's violated on that candle. The candle that created this fair value gap is down here. We'd be looking for 1.5. We'll place our order, a buy limit. It did not hit, it didn't get triggered, and it did not take that out yet. So, all right, there it is. Now we'll cancel that. With that trade being canceled, there was no more fair value gaps violated for us to take an entry long. There's a fair value gap here. If you're just marking out every time you see a fair value gap, you're marking it out. This is not bias. There's no higher time frame bias. There's no liquidity levels. This is purely a mechanical, truly purely a mechanical system. If this fair value gap got violated, we go short. There's no fair value gaps anywhere in here. Currently, still no fair value gaps. What time is it? Oh, there's a small fair value gap here. What time is it? It is now 11:10. So we're past our trade opportunity. So we're done for the day. No trades. So for the first full week, we won one, we lost one. We're up 2% on the account. The loss we took was a partial, not even a full loss. Next New York session. So we're coming into a new week, looking for a fair value gap created during the London session. This is the start of the London candle. This is not a fair value gap. It's not one I would consider. I want to see a new fair value gap created during the London session. Okay. And there's one right there. If this gets violated, we would look to go long. There's another small fair value gap right here. You're just going to notate each of these. That one gets traded through. So our first buy limit will be right here. Now, if this doesn't get triggered, and let's say this fair value gap gets violated next, we'll cancel this order and set a new one, which is what I should have done on the first one. We would have already had 2 winners. Did not happen. All right. So we've got our order set. We get triggered in. And we will be out of this at 1550. So if we're still in this trade over here, we'll be out of it either way. Oh my gosh. You got to be kidding me. There it is. Another winner. We're now up 5% on the account. Go to the next New York session. Next New York session, we're waiting for a fair value gap to form after the 7 o'clock candle starts. Anytime in that session, we'll be looking for a fair value gap to be violated and then a entry on the retest of a violated fair value gap. There is your first fair value gap of the day. There's no news, so we're clear to trade. Sorry, I should have said that right away. No news, so you're clear to trade. Or if this gets violated, we'll be looking to go short. It did not get violated. There's a small fair value gap right here. If that gets violated, we'll look to go short. It's violated right there. Above the high, it created the fair value gap, looking for 1.5. Gets triggered in and immediately gets ripped to a stop, and you're done for the day. New York session. Next day. Waiting for, we have news at 8:30. This is retail sales, so we'll wait until after the numbers come out. We'll just pump forward here. And, okay, so the news came out on this candle. So we're free to trade now after we identify fair value gaps from this point forward, if any. All right, there's one. Oh, the account is down to 3%, by the way. That fair value gap has been violated. Take a touch of it. $1.5, place the order. Sell limit. Triggered in. TP. We're up 6%. Go to the next day. Waiting for a fair value gap to be created in the New York session. There's no news, so we're free to trade. Fair value gap, it is 950, so that's our first fair value gap of the day. Right there. It was that, I guess we could call that a violation. It did close above and beyond that. So let's just follow the rules and take it. We'll probably very likely get triggered into this because price is literally right below. Hit the stop loss hit. Go to the next, so you're back down to 4%. Waiting for a fair value gap to print after this candle. No fair value gap. There's a 7 o'clock candle. There's no fair value gap inside there. Small, tiny fair value gap here. I mean, I don't even know if that's a pip's worth, like half a pip fair value gap right there. Oof. I'm wondering if part of the rule should be that the fair value gap must be a certain size. I don't even know. It gets violated through. We'll just stick to our rules. It says if a fair value gap is violated, to take the inversion of that. 1.5 right there. Place the order. TP hit. Triggered in. Full TP. We're at 7%. This is Friday, January 20th. So we're 2 weeks in and we're at 7%. Let's go for another 15 minutes. If you're down with that. New York session. No news. We're free to trade. Waiting for a fair value gap to be created after the 7 o'clock candle. So we have a fair value gap created right away. Any violation of that fair value gap will take a trade in the opposite direction. Not violated. It was wicked through, but it did not get a body closure above. So it has to close outside of the fair value gap to be violated. The wick is fine. Next candle. No fair value gaps. Obviously some kind of news event, but it wasn't listed on here. I would think that's a news event because that was right around 8:30. But there was no red folder news event listed, so we're free to trade. Here's our next fair value gap. And then here is another new fair value gap. It is approaching the 10 o'clock hour, so we're coming close to the end of this trading session here. Violated. It's still within our time to take a trade, so we'll set this up like that. We will place an order. We get triggered in, and you hit your stop loss. Done for the day. Account is at 5%. All right, 7 o'clock, looking for no news, so we're free to trade. Waiting for a fair value gap to be created. There's one right there. Technically, that was a closure above that, so we'll stick to our rules. So it'd basically probably be a market order entry, I'm guessing, as that 10-minute candle closed. I'm not sure you're going to have time to set a actual limit order there, but we'll do it here. And that did get triggered in, and it did hit a TP. So we're back up to now 8%, and phase 1 challenge would have been passed. This is the 24th, so just the start of your 3rd week of trading. You're at 8%. Go to the next trading session. Waiting for a fair value gap candle to be created. There's your fair value gap. No body closures below this has not been violated. Oh, do we have news? No, we didn't. I forgot to look. No new fair value gaps yet. This is the only one. No fair value gap there. That is touching. Time is this? 10 o'clock. Fair value gap created. We're approaching the end of the session here. It is 10:30, so we can still take this trade. Triggered in. This trade would be closed at the very latest here, at the end of the trading session. All right, coming to the end of the trading session, so that's the 10:50, so we'll close it out on the next candle. So we took a small little loss. The account is back to 7%. So just right at a 1% loss. Next session. Waiting for a fair value. This is the 7 a.m. candle. So this fair value gap right here is not constant. This is the first candle, so that can be counted to create a fair value gap. So we'll see small. Oh wait, there's news here. Oh yeah, not trading anything until after the news. So we'll go up to past 8:30 here. There's the news. Now we're waiting for fair value gaps. Now that the news is hit. So now we can trade. We're free to trade until 11. Fair value gap. Another fair value gap. It is 10:40, so we're likely not going to get a trade opportunity today. There is the 11 o'clock hour. No trade. Next session. Waiting for a fair value gap to be created. There it is. violated. Stop loss. 5%. This is coming to the end of January here. We have 2 more today and tomorrow. These next 2 days would be the end of the January trading month. Fair value gap, small little fair value gap here. TP. We're at back up to 8%. Last day of the trading month here for January. No news. Triggered in TP. 10%. No, 11% basically. All right, so there's a quick little January. We can keep going with this. I'll just save this and keep it going. Maybe we'll do some more tomorrow. We'll just keep playing this out. But quickly, we can just now go back and go to your dashboard. You can look at your analytics. And you can see how this strategy just in the month of January would have played out. So you had basically an 11% gain, almost a 54% win rate. There were 13 trades, 7 winners, 6 losers. Your average risk reward was 1.5. The ideal average risk reward is 7.2, and the max would have been 21. So what this means is that the average is the maximum profit a trade gives you. So that's the ideal for the strategy. The max is what you would have had you held your trades. The highest trade would have given you a 1 to 21, which is pretty awesome. Here you can see average duration once you're in a trade is 1 hour and 17 minutes. There were 13 total trades. There were 24 days. We had 7 winners. The best win was 3% because you're risking 1.5 and you're getting a 1.5. 2 was the win streaks. 2 was the losing streaks. Again, this is a very small sample size. Mondays and Tuesdays were the most profitable days. Tuesday was also the least profitable day. And then here's your January breakdown. There were some red folder news events in there. There's some weekends in there, but that's how that plays out. So there you go. That is a quick little view into the strategy there that I'm working with. So we can Venator's in game mode. How this would have done during July, August, September. Well, go back test it. I just showed you how to do it. You can go back test your results. You guys put it in the Discord. Let's see what's going on with it. Just remember, you're going to have to tweak your rules. But you just saw very quickly how I would do that. And you can knock out a few months in probably under an hour. But you just need to be very clear about your rules, be specific and mechanical. Don't be like, oh, well, I'm not going to take that one. I'm not going to take this. Just take every single one that fits the mechanical strategy and see how it worked out. For instance, if you had just done today, let's see, where's the 7 o'clock hour for today on euro dollar? Let's just do today. What would a day have done? Well, number one, we trade through that news. We said we would trade through that. We're not going to wait till 10. So where's my button? Where this is 7 o'clock hour. Nope. Oh, we need to go to the 10-minute time frame. Here we go. 10-minute. Go forward one candle. All right, there's the 7 o'clock candle right here. There's your fair value gap. I can already tell you this would be a losing trade if this were to work. It gets violated. No, it doesn't. Sorry. Now it gets violated. I can tell you this is going to be a loss right now, just because we already know what happens the rest of this session already. You would have gotten triggered in, and then you would have had your stop loss smashed. So again, it's not a perfect system. You're going to take losses. You can see just in January, it was a 53% win rate, 54% win rate. You're going to take losses on any mechanical system. You're just trying to find one that gives you a better risk reward ratio and a fairly decent win rate. And then you just stick to it and let it play out. You can see in January, you would have gotten funded and gotten to a probably past pace too, because you got to that 8%, and then the very next couple, you ended up getting back up to 10. So you would have been close to probably being fully funded in January, just off of that one strategy. But again, you guys, I know some of these statistics for these other pairs. You can do it on other pairs. You can try it out. You can see, test it, back test it yourself. Run it through July, August, and September, are crappy months. See how it plays out. Use different time frames. Try the 15-minute time frame. Try the 30-minute time frame. Try the 5-minute time frame. You can try all kinds of different things. This is just how I've been building out a trading system, and it started way different than where it ended up. So, and I'm still not finished with it. I want to run it on multiple pairs. I want it across multiple months. I want to try multiple time frames. I want to try multiple risk reward ratios. I want to try moving to stop. I want to try moving to break even. So there's all kinds of parameters and trading strategies or trading rules that need to go into this to refine it. That is just a very basic entry-level concept that you can start playing with. He hasn't looked at a comment of over 30 minutes. I'm in focus mode, man. I'm in focus mode. It's like when it's time to say goodbye. I'm just streaming, bro. I'm just streaming. Where do you get FX Replay? It's just a website. You can get it is a subscription model, but it's based off of the TradingView user interface. You can add indicators. You can add all kinds of stuff to it. You can use TradingView. You can do the same thing. You just have to track your own data. You don't have the pretty dashboard and all the analytics that go with it. So that's the nice thing about FX Replay, is that you can actually enter orders the way you saw me doing it, and then it tracks all the data for you. You can go to your dashboard later and check it out. It's very nice. I got the free trial left for 4 days. I can't remember. It's like $30 a month or something, or you can pay an annual fee and it's a little cheaper. What's the time frame? 10-minute time frame is the time frame I was using. You didn't miss much. What happened to your 100K count? It's gone. You going to try it with gold? You can. You're more than welcome to try it with gold. I'm probably not going to try it. I probably will try it with gold. I just haven't hit it up with gold yet. It'd be interesting to see how it works. Welcome in, Profit. All right, guys, I think we're going to call it here. Roll the credits, roll the music. You know that means it's time for goodbye. It's been a good session. We'll be back at it again tomorrow. I'll be on Discord and Twitter today, so jump into the Discord. Let's be active. Let's see those trades. Let's see those setups. Let's see those ideas. If you're going to backtest anything on FX Replay, let's see that data and let's see how it plays out. But I'll probably be off the charts for the rest of the day today. And just y'all be safe. It's been great. I love having you guys in here every day. We can do some more back testing tomorrow because like I said, I'm probably not going to be trading for the rest of the week. So might as well we can do some more of that too. But you guys stay safe. Happy hunting out there. And we'll see you in the morning. Adios, y'all.